Hi, everyone. Thank you for tuning in to the second episode of the Trader Development Podcast. My guest today is Akil Stokes. He's a Forex trader, someone I've learned a lot from over the past few years. As many of you know, I don't trade Forex, but he is someone that I think any aspiring trader can learn from. He's a Forex trader, a trading educator, building traders from the ground up, just someone that has a wealth of knowledge, and I think anyone will become a better trader by learning from him. So you can see all his social media contact stuff on the first slide as well as his website. And I really hope you enjoy this episode. Hey, Akil, nice to have you on the podcast.
Hey, how you doing? Thank you so much for having me here.
I think just to start off, I wanted to get your kind of like a brief overview of your journey, how you started trading, why you started trading, and how you got to the point where you are now as an educator.
Sure, no problem. I'll try to be brief as possible. I can usually ramble forever. I first got introduced to the financial markets right out of college. I graduated from school. I didn't really know what I was going to do with my degree. I was going to grad school, and I was talking to my dad. And growing up, he's always been really good at keeping me financially educated. So, how money works, savings accounts, certificates of deposits, all of that fun stuff. And I had money saved up because I essentially worked my entire life and never really spent it on anything. And I had those last bits of graduation checks coming in as well. And he said, well, the next step is to invest it and get involved in stocks. So that's what first got me interested in the markets. As I went on the journey of really learning how the stock market works, how it operates, making a few investments, I started falling in love with the game. It was cool. It was interesting. It was kind of like a puzzle that you never completely figure out, but it drives you to keep going after it every single day. And I liked it. And as I got more into the industry, I started seeing a lot of the stuff that you guys probably see online where, you start searching for stuff and all the ads pop up and it's, try this, try that, get rich quick, all this fun stuff. And that's what really, introduced me into the idea that, hey, maybe I can try to do this full time. It was during the recession here in the US, so I couldn't get a job anyway. I was filling out applications. I was either too underqualified because I had zero experience or overqualified because I just had a master's degree. So I was like, hey, let's try it. There's nothing to lose here. The worst case scenario is you go back to doing the same stuff you're doing now. And I went for it. And it wasn't a smooth transition. I had pretty good success in the stock market. So when I went more into active trading and from investing, I was a little bit, I don't want to say cocky, but a little bit maybe overconfident. Like my whole life, I always thought that, hey, or my whole life, I've become successful just by outworking everyone else. Meaning I would just work and work and work and learn and figure it out. So I figured the markets would be the same way. I'll just learn and study and read and do this and listen to that. And eventually I'll figure out a way to make it work. And it just wasn't having the same results. And I was really stubborn about that for quite a while, and finally got to the point where I accepted, like, hey, I can't do this on my own. I need help. I happened to come across a trading mentor, a coach that took me under his wing, taught me what was needed to do to become successful. Fought him on it for about a year, still did dumb stuff and in hopes of getting rich a little bit quicker than normal. But eventually learned like there is a right way to do it, put my head down, worked hard, became successful, and became a consistently profitable trader. I then went on to manage money for a little bit. Enjoyed it, but it definitely wasn't my passion. It's a whole different game of dealing with other people, and the pressure is certainly different as well. And after that, got into education as I kind of really started, really by accident, falling in love with helping people. I actually had a blog post that I was writing just for a personal accountability process of like me kind of writing my thoughts down and tracking my mistakes. That's what my mentor said I needed to do. And people started stumbling across it like, hey, man, I made those same mistakes, or I'm bad too. And I started realizing that just, indirectly I was helping people, and it became a passion of mine. And now I'm doing both of the things I love. I'm trading and I'm helping people. So it's the best of both worlds.
Yeah, I think you're in a unique situation because you're a professional trader and you put in time to you dedicate to that craft.
Mhm.
but then you're also a trading educator. You're an educator in general. You're
Yeah.
a mentor and a track coach, but you're one of the few people in the trading industry that are also working towards becoming a better teacher.
Yeah.
And I think like, and you're a sports guy, so like, you don't necessarily want Michael Jordan as your trainer because he does so many things instinctively that he may not be the best teacher, even though he might be the best player. And so you're kind of pulling at both ends where you're working on your craft as a trader, but then you're also trying to be the best mentor and teacher. So I think you are a really valuable asset to the trading community because you kind of have both of those aspects going for you.
Oh, thank you, man. Thank you. I love that analogy too, because I've heard that so many times where the best athletes don't always make the best coaches because they just like instincts. Like, how do you do that?
Yeah,
I don't know. I'm just great. It's like
yeah, exactly.
usually it takes the people that kind of got to go about it the hard way to be able to relay those messages. So, and I've kind of accepted that, like you said, where I don't consider myself a great trader by any means. I kind of, when people call me a great trader, I kind of shun that away. I'm a good trader, not great, and I'm striving to be great in both aspects, like you said. So that's cool that you recognize that. I appreciate it.
Yeah, no, and like you trade. Actually, why don't you tell everyone a little bit about what you trade? You trade the forex markets. Is there like a methodology, style of trading that you prefer? And maybe start with that, and then I'll ask my next question.
Yeah, so strictly the forex market right now. I do have other investment interests, but as far as active trading is the forex market. I got involved in forex just because of the flexibility. I started in stocks, and forex just allowed a lot of things that were more beneficial to me. So you can start trading more actively and have a little bit more of an impact in the market with a less amount of capital. The 24-hour nature was beneficial because it gave flexibility around my life where I can, there were always quote unquote opportunities to trade. That's for better or for worse, but I'm not stuck to a certain time period. And the fact that it's highly leveraged again, that's a gift and a curse as well if you use it the wrong way. But the leverage does allow you to, if you want to be aggressive and kind of grow your account a little bit quicker than other markets, and just general the forex, it's a much more liquid market. There's a lot of liquidity, a lot more volatility. There's a lot more opportunities to trade, which as traders is what we need. So I focus mainly on the forex market. My philosophy in the market is really I'm a price action trader. So I believe in price action, kind of bare bones, naked trading. I do use some indicators, and I don't have anything against indicators, but understanding that at the core of everything, the spine of the market is price action, and price
Right.
action is nothing more than human beings like me and you. It is the price chart is essentially a visual representation of all of the action of the market's participants. So
Mm.
whether we're talking insiders, smart money, retail traders, it's happening on the price chart, and the price chart leaves amazing clues. So everything I do starts there, more specifically with structure. So support, resistance, supply and demand. Those are kind of the centerpieces. I can't take a trade without them present, whether it's an entry, whether I'm using them for exits, whether I'm using them for targets. They show up all the time.
Mm.
And then I have a handful of other tools that I use kind of around that. So different maybe harmonic or ratio type moves. I do use a few indicators. I've recently implemented volume a little bit into the story. But everything kind of supports that general theme of price action is king.
Awesome. Okay, so I kind of want to use kind of a philosophy that you have that you mentioned in one of your podcasts as a framework for the podcast. So you mentioned do the right things in the right way with for the right reasons and for the right amount of time.
Yep.
So I kind of want to use that as a framework. Can you actually let's start with for the right reasons. I think that's like a prerequisite. You have to do it for the right reasons. Can you talk about what that means to you and how that can be helpful for a trader to have their mind right in terms of what their reasons are?
Yeah, I think you got to have a big why. And I'm never want to tell someone, excuse me, what their why needs to be, but I think it has to be bigger than money. I think if it's money, you're not going to have that drive to keep going.
Mm.
So for me, it's freedom first and foremost. It is not just financial freedom. That's awesome. Don't get me wrong, but it's time freedom as well. So I've got two kids right now. I got a 7-year-old and a 3-year-old, and the fact that I can be flexible in my job allows me to spend so much more time with them. I'm home during the day, where during a lunch break I can go play with my kid. When my kid starts having, plays or school trips, I can go see them. I'm at the point right now where, we just took a vacation a couple of weeks ago and just said, hey, we're taking a week vacation. Like, I didn't have to ask anybody permission. I just did it. And with trading, because all you need is computer and internet, you can live kind of a nomadic lifestyle where you can pack up and do it from anywhere in the world. So my bigger why was obviously, financial freedom. I want to put myself in a position where I wasn't taking direction from somewhere else, where, maybe my floor could be a lot lower because it's all on me, but my ceiling is unstoppable. I was no longer dependent on a boss to tell me when I can get a bump in pay or a bump up the organizational ladder. So I think that why has to be important, because in your trading journey, you're going to go through some really dark times. And if it's strictly money, it's very easy, because there's so many ways to make money.
Right.
It's very easy to find the next thing. It's so easy to be like, oh, I'm going to give up on trading and I'm going to go do this, whatever popular thing on the internet is. But I think if your why is big picture, I hope that I can teach my kids the skill of trading. It doesn't necessarily mean that they're going to be traders, but at least they'll know how the market works. And who knows what the world will be like 20 years from now. But if they're in a position where it's hard to find employment, at least they have a skill where it's like, hey, I can go out and make myself money and I'm not dependent on the economy or whatever. So that's my why. It's financial freedom, it's time freedom, and really kind of a generational skill that can be passed down to the future.
And did you have times when you were learning? Because I think you said you've been trading for, is it 10 years now?
Oh, no, 15 years. I like 10. Makes me seem younger. 15. I think this is the 15th or 14th year. Yeah,
that's crazy. Okay, so 15 years in. I mean, you've had success for the last chunk of it, but like when you were first learning, like, did you have really dark times where you wanted to quit? And like, how do you push through that when you feel like, like I sometimes think like with a lot of skills, you always see the light at the end of the tunnel. And so in that sense, even though the light is so far away, it still feels like if I just take one step forward every day, I'll get there. But with trading, sometimes it feels like, you're in a tunnel, but you don't see a light and you don't know which direction to go and you don't know what to do. So like, I think there are a lot of dark times, like you mentioned, and in those situations, how do you push forward? Where do you reach inside to find that motivation and the courage to keep going?
Yeah, you're 100% right. Trading is probably one of the toughest things out there. There are a lot of dark times, and the difference in trading, because it's so much of a niche field, there's not a lot of support when those dark times are there. Most of us are alone trading. So when it's dark, and instead of hearing voices and having other friends or reaching out and holding a hand, it's just us and our thoughts, and it just leads us to, will I ever get out of this? I'll never succeed, and all the negative thoughts that come into our mind. I certainly went through a lot of those. You got to have that why. You got to have that drive, that desire, the bigger picture, to kind of think about, hey, I'm going to struggle. And I like framing it this way, since you mentioned my 15 years. So I've been successful for probably about 12 of those years now. And 2 years prior were horrible. And at the time, those were the longest 2 years of my life. But I look at it in hindsight now and I say, okay, well, 2 years of struggle, 12 years of success. And now those 2 years seem like nothing. And it doesn't necessarily help the person that's in that 2 year period right now, but hopefully by what I'm doing and the message that I'm trying to spread, at least, it gives people hope, where it's like, hey, this guy came from the same situation as me. He wasn't in an Ivy League school. He wasn't on Wall Street. He was kind of someone who went after it and sucked for a little bit and got good. Hopefully I can do the same thing. And for people going through those dark periods of time, you've got to latch on to people like that. For me, it was a trading coach, a trading mentor. And he had the same journey as me, where he kind of taught himself and he did a lot of dumb stuff and kept going and was successful. So I hung on to him. Every time things got dark, I'd reach out for advice, or just words of wisdom, or just like, hey, am I doing things right? Something to kind of just give me peace. And I would advise that any trader out there that is in that situation, find a fellow trader. It could be a fellow trader who is on the same journey as you and maybe struggling. Misery loves company. If you're both going to suck together, or find someone that is successful and just, reach out, try to, have communication with them. I'm not sure how outgoing a lot of the traders are out there on social media, but if you can find someone that isn't afraid to respond back, and obviously a legit person, don't be afraid to reach out to them, just to vent. I get a lot of people every once in a while just be like, hey man, I'm just in a dark place. Can I just write you a long email? I'm like, go for it, man. Because sometimes it helps. And sometimes you end up answering, a lot of the times I would say you actually end up answering your own question when you kind of write it towards someone else. So keep faith. But also you need to find someone, either a mentor, a friend, or both, to kind of be with you through that journey. It'll make it a lot easier than trying to do it by yourself.
And do you have anything to say about just quickly on like what you'd recommend in terms of finding a mentor? Like how should you find someone who's trades a similar style, or did you find someone who's traded a similar style as you, or is it just find someone whose style you want to emulate? Like, do you have anything to say about that, about how to find a mentor?
That's a good question. I guess it could be either or. I guess it depends on what part of your journey you're at. So if you are, let's say, someone who has experience trading, but it's just not working, things aren't going your way, you may have a style already where it's like, hey, I know I want to be this type of trader. I'm just kind of stuck. I need to get over that final hump. In a situation like that, I do think it's worth finding someone with a similar style, because you don't necessarily want to start over, especially if if your philosophy is a certain way. When I found my mentor, I was kind of brand new. I was doing everything. I didn't have a style. I was doing whatever I thought would make me money the quickest. So I was bouncing around for different places. What attracted me about my mentor is that he kind of cornered me. So he gave me this thing called a trader assessment and was asking about my trading style. And I would say a lot of ums and maybes and usuallys and sometimes, and he'd be like, well, give me a direct answer. And I couldn't give it to him. I was trying to BS him. And after I kind of gave up, said, you know what, I don't have a trading plan, all that fun stuff, he kind of talked to me about rules-based trading. And that was new for me. For me at the time, it was just kind of, you go off a feel, you go off whatever you see on the internet the day before. There was nothing kind of consistent. And his philosophy was like, hey, you got to have rules. You got to have a trading plan. That trading plan has to be tested and verified. So it proves to you that, the probabilities are in your favor. And for me, that made sense, because I'm not the greatest with math, but I'm a numbers guy. I trust numbers. If 1 + 1 = 2, I can trust that. So it kind of made sense. Like, okay, I do need to be disciplined. It's kind of like sports, where if a coach gives me a play, I should follow the play because the coach is giving me the play because there's the best chance of working. So that discipline method was something that attracted me, not necessarily the I guess the specifics of how he was trading. Although I ended up liking that as well, but first was just the disciplined nature of it. So I think it has to work on both ends. The style has to be correct. If you're not an indicator trader, I don't think having a mentor that's an indicator person is going to be worthwhile for you. But you also have to have someone that's going to be real with you. I think that's important too. Have a mentor that isn't afraid to be honest. They're not just going to sugarcoat things and be like, oh, you're doing great when you're doing bad. I also think they shouldn't give you the answer. I think they should encourage you to work. It shouldn't just be like, hey, here's a strategy, just trade this. It should be like, hey, here are some ideas. Here's some advice, but you got to do the work on your own, because you doing the work is what's actually going to make you an independent, consistently profitable trader versus someone that just kind of eats the leftovers of someone else.
Right. That's a good point. And that's a good segue into the first bulky section, which is the do the right things. I think you mentioned in a couple podcasts of Mark Douglas, who talked about 90% of traders fail, but there's that 50% who are, they're not really serious, they're recreational. And then you have another group who are really trying. And I want to talk about that group, because I think the people watching podcasts and looking on the internet, they're trying, And even with effort, and effort is necessary, but it's not sufficient. You can't just, you say, I don't care about screen time, I care about what you're doing in front of the screen. And so you have to do the right things. And so what are the right things in your mind? I have categories of you mentioned analysis, execution, and auditing. So analysis is all the stuff behind the scenes, find your edge, back test. So can we start with analysis? What are the most important things for someone who they're noticing something on the internet, they're noticing something in the charts and they have an idea of what's happening, but now they have to create a strategy around it. So can you give some of the things that you tell your students about how to develop a strategy, how to backtest appropriately and effectively, and how to create an edge and find an edge?
Sure. So it all starts with the basics. You got to understand how to read price chart. I think whatever you do, whether you're going to go into indicators, whether you're continuation trading, structure trading, pullback trading, you got to understand how to read a price chart because that's the lifeblood. It's going to give you all the clues. And I think what a lot of traders will end up noticing is there's really no such thing as counter trend analysis or continuation analysis. It's just analysis. And analysis is the act of kind of reading and interpreting what's happening on the chart and being able to make a prediction on what do you think is going to happen next. Now, based on your specific style, that tells you, hey, do I take a trade to that level? Do I wait till a trade gets to that level for the next trade? That determines all of that. But it starts with just being able to read the clues that the market is giving. And the interesting thing about the markets is that it repeats itself. I mean, there's only a handful of things that it actually does. And it's been doing those things for centuries, to be honest with you. The hard part is that it kind of fools you and distracts you with all the other stuff where it gives you a million things. And then there's like that one thing is hidden in between and you miss it because you're not disciplined or because of, a million other reasons. So I think first and foremost, understanding how to read a price chart is key. Understanding what type of trader you want to be. Do you want to be someone that trades a reversal? So if price action hits a level of structure, do you want to be that person that trades that structure and looks for a little bit of relief? Do you want to be a continuation trader, meaning after a key level is broken, do you want to kind of hop in for that next wave to the next level? And then once you kind of understand what type of trader you want to be, now you can dig into the specifics of, okay, I want to be this type of trader. Now, how do I actually get into the trade? And a lot of those questions are millions of methods to do that. But the question you have to ask yourself is, do I want to be aggressive? Do I want to be a conservative trader? And a lot of that is based off your personality. And there's nothing wrong with changing over time. I started off when I was reckless, really aggressive and losing money. Then I got super conservative. And then after I kind of started finding my feet and getting more confidence, I still consider myself conservative, but I'm much more aggressive than I was before. So that can shift over time. But once you understand that, that'll help you with your entry technique. Targets and stops are nothing more than analysis. If you're good at analysis, you should be able to identify key levels where price shouldn't go if you're right, and where price should go if you are right. And then you start putting the plan together and understanding that the plan is always a work in progress. Even when you write your first plan, you're going to plan it out. You're going to start your back testing, whatever, and you're going to notice little things and you may make adjustments here or there. And that's cool because all it is reps in the market, which ultimately make you better.
Right. And how do you find your personality? Is it just like committing to something first and seeing how you like it? Because I feel like when I was starting out, I didn't like it because I was losing. And it wasn't necessarily because of my personality. It's just like, you're not taking good trades. So like, I don't want to be a swing trader because I don't like waiting, but really it's just, I'm not taking the right trades. Mm-hmm. So how do you find that your personality in the market, and how do you find something that suits you? Is there a framework for that, or is it just over time you get experience?
Experience is going to be the biggest clue. I mean, some people are really in tune with themselves. I was similar to you. So I was losing money really, really quickly. So I had to give myself a million reasons to be disciplined. So I had a checklist of like 5 things. I'm like, if all 5 things don't happen, I can't take the trade, because I had to be super disciplined just not to step on my own feet. And then I realized, like, wait a minute, I can find the same trading opportunities. I'll tell you this. So imagine I'm taking these trading opportunities and like 5 things have to happen in order for me to take it. So I get in a few trading opportunities, but a lot of them, 3 things happen and then it goes in my direction. I'm like, come on, I could have gotten there. Mm-hmm. Part of the growth process of trading is evaluating that, where I'm like, okay, these 5 things didn't happen, but I'm starting to notice that, hey, when these 4 things happen, it's the same kind of result on average. So I can start becoming a little bit more aggressive. Oh, these 3 things happen, which would allow me to get involved even earlier, but doesn't really add too much risk. Maybe there's a few trades where I get stopped out on because it didn't do the other 2 things, but most of the winners have these 2 things. Okay, let me get a little bit more aggressive. So you can kind of start conservative or aggressive. And if you're doing consistent analysis, kind of like a post-market review of how your trading is going, whether it's live, demo, or just like randomly staring at a chart, you can kind of start seeing different ways to attack it. And then it's about feel as well, your comfort level, where it's like, sometimes you'll look at a chart and you'll feel yourself like, man, I want to get involved in here, but I'm so scared I can't do it. And that's a good sign of like, hey, maybe I need a little bit more proof. Or if you're someone that's really antsy, where it's like, hey, I need these 5 things, but oh man, I got to take it now. I know it's going to happen. No, I know it's going to happen now. And then you find yourself making mistakes because you can't wait that longer. It's probably better to kind of find a more aggressive route. So some of it is knowing yourself, your personality in real life. Are you someone that, if it's a yellow light, do you kind of speed up and go through, or do you stop? That'll help you tell if you're more aggressive or conservative. Sure. But a lot of it is trial and error in the market, and kind of writing down how you feel in each situation and kind of basing it off of that.
Nice. And like, I think you mentioned in one of your earlier podcasts, you said like 40% hit rate for you is like, that's the base. Like, you're not gonna go lower than that.
Yeah.
Like, that hurts your stomach. More recently, it's like even 50% is like, you don't want to be less than 50. So like, is that something that over time you just get a sense of like, this makes me feel uncomfortable. I don't want to live in that under 40, 50% accuracy rate. And that just comes with just reps in the market.
Yeah, I think it comes either reps in the market. Sometimes you can kind of simulate that through back testing, although it's always hard when it's not live money. But I'll do that now, because I tell people that, hey, 40% is kind of my limit. But I like to think that because I have experience, because I trust myself a little bit more than 10 years ago, that maybe I could be a 30% trader and be successful. And I'll do stuff where I'll back test and working on like continuation systems, and it'll come back with like a 30% result. And I just can't do it, because I'm going through that process, and it's like, hey, 5 wins, and it's like 20 losses in a row. And I'm like, I need to win. I need to get that little glimpse of hope to know that I'm doing the right thing. So yeah, a lot of trial and error will tell you that. Hopefully your trial and error is done mostly in back testing and demo trading, because although back testing isn't real money and you don't have the same emotional pulls, you get frustrated. And for those who have been through the process, you're going through and you get 10 losers in a row, or if you're back testing something that doesn't work, like, it hurts. Like, you want it to win because you want it to do good. Right. So you think about it like this: if you can't stomach it during back testing, there's no way you can stomach it with real money, because it's going to be at least like 10 times worse. So I think going through that back testing process, or that demo trading, that paper trading process where you're executing trades live with just no money, or very a minimal amount of money, I think those are good opportunities that you can use to kind of feel where does that range lie, and then you can go back and adjust your strategy, or maybe just go about finding a new one that kind of fits within that range. But a lot of the trading, as you mentioned, is trial and error. A lot of these lessons I just learned because I've been doing this for so long. They didn't really come all at once. They came over time.
For a beginner to intermediate trader, how, when they're backtesting or when they're looking for a strategy, how rules-based should it be? Is that something where you'd recommend a student start off more rules-based and then shift into more intuitive, or bending the rules? I know you give the Ben Roethlisberger example a lot. So can you actually talk about that and how that would apply to someone who's starting out in terms of rules-based trading, and how important you think that is in the beginning?
Yeah, so I think rules-based trading is important at all times. Now, the cool thing about rules is that because they're your rules, you can make them whatever you want. So you can technically have rules that are super loose. But I think as a newer trader, you need that discipline, because at the beginning of our trading journey is when we're most likely to do the most dumb stuff, just because we're new, we're young, we're kids, we're babies, we're making mistakes. Like, we don't know what we don't know. We sometimes think we can get away with stuff. So we need to be as strict as possible to ingrain kind of those rules, that routine in our head, where it's like, this is what I'm looking for. This is how I take it. This is where I do this. This is where I do that. And again, with the growth process of a trader over time, and experience is going to be your best teacher. Obviously coaching and mentorship and books and videos and courses or whatever is going to help you kind of get in there. But experience is going to be your best teacher, because there's nothing like seeing the live market, because it does so many things that we'll never mention, because it's always unique. And what you'll notice is that as you develop as a trader, you'll start to see certain things, but you may not know what they are. So you'll have that intuition will start to grow and tickle you, and you'll be like, we're going to go up. And like, someone's like, well, why do you know that? And you're like, I don't really know, but like, I just have that feeling. And that feeling is really based off of, hey, you've been in the market putting in all these hours. You've seen it before. You just never really paid attention to what it was.
Hmm.
So my advice is that when you have those intuition moments, like take a picture of the chart and just save it somewhere. And then next time you have the intuition moment, take another picture. And before you know it, you'll start looking through that folder and be like, wait a minute, the last three times the market did this type of tight channel, it broke out to the upside. So now you have a kind of an idea of like, okay, this is the thing that I noticed, that is that intuition. So now you can't just give yourself permission to just trade it. Oh, I feel like I'm going to trade it, but you can now assign rules to it. So now you can go, now that you know what it is, you can go back, you can dig into it. You can be like, hey, every time it hits this level three times, on the fourth time it breaks out, well, now you have rules. If price action hits this three times, then put buy stop here for the next breakout, stops go here, targets go there. So you can start making it rules, and before you know it, it's added to your plan. So intuition is cool. I have intuition all the time. There's a bunch of things I see in the market that I can't explain. I'm just like, man, it's going to go up.
Hmm.
But I have to be disciplined enough not to take it, not to trade it, because it's not in my rules. But what I'm trying to do as a trader, and this is how I continue to evolve, and this is this was part of me becoming more aggressive, because I would notice things like this, is whenever I see something or I feel something, I try to write it down. I try to take a screenshot of it. I try to take a video and say just, my thoughts at the time. And then eventually I revisit it and then put in the work necessary to kind of turn it into something rules based. And if I can do that, if what I'm seeing actually has legs, it passes the back test results, now I can add it to my plan. And now my plan gets a little bit looser, because instead of just trading one way, oh, now I've got two ways to attack it. And now I got three ways to attack it. Now I got four ways to attack it. And it gets to the point right now where if I were just doing a random video of like how I trade it, you would think I would have no rules, because I have so many ways to attack the market.
Right.
But when we actually break them down, like everything is rules based. It's just I have four different ways. So it kind of seems a little bit looser than it was, 10 years ago, when I had to have five of these specific things happen. If it didn't happen, couldn't do anything about it.
So you also started very strict, and then as you got a sense that there's more to it than these five rules, you started to change those rules, but you didn't change them on the fly. You got the information, and then you made sure that the plan changed first before you took action on it.
Yep. Yeah. And it expands over time. It's very similar to parenting, where it's like, again, with my young kids, where, my kids, if my kid was 1 year old or 2 years old, whatever, and he's walking on the street, like I'm holding his hand no matter what. Cause I'm like, he's not going to know to stop at the crosswalk. But as they get older, you give them, they still have rules, but they're not as strict, where it's like, hey, we can walk. You don't have to hold my hand, because I trust them a little bit more. So those rules, that fence of rules, you're always working within them, but they kind of get bigger as a trader as you give yourself kind of more freedom and more trust that you're going to do the right thing.
That makes sense. Okay, so we talked about analysis. Now for execution, can you talk about, it kind of touches on the rules-based trading as well, but can you talk about your IPDE system, or like your methodology for making a decision, and your rules of engagement, and why those if-then statements keep you out of trouble?
Yeah. So IPDE, one of the best things I learned: identify, predict, decide, execute. It is a process. It's something that kind of keeps you, it keeps you rules based in your analysis. So you're doing the same thing all the time. So identify is just looking at the market, and you're asking yourself, what is the market doing? What has the market done? Are we at different key levels? So again, structure is the centerpiece of my philosophy. So I'm always looking at levels of structure. Are we at a level of structure? Did we violate a level of structure? Where is the next level of structure? Stuff like that. If you were an indicator trader, you could do the same thing. Maybe it's like, hey, is the MACD above 50? Are we above a moving average? Did the RSI go overbought, oversold? Are we hugging a Bollinger Band, something like that? So no matter what style of trader you are, you can still use this process. And then once you identify whatever you see on the chart, now it's up to you to make the prediction. So, based on price action violating this recent level of structure, I predict price is going to go higher, and then higher to where? Well, to that next level of structure. Or based on the moving average just crossing, the 20 just crossing the 50, I predict that price is in a bullish trend. That means we're likely to go to this level. And what that prediction does is, and I always say prediction works in three ways, right? Which way is the market likely to go? where is it likely to go if it goes that way? And then how is it likely to get there? So those are kind of three questions we want to ask ourselves. Once we have that prediction, that basically sets up our trade for today, right? If we have a prediction that, hey, price is likely to go bullish and it's likely to go bullish to this level, that tells me, obviously, if it's something that I can trade, hey, there's a trading opportunity from point A to point B that I can take advantage of. So then we go to our D section, which is decide. Now that I have this prediction, now that I have identified this as a bullish trading opportunity, how do I go about deciding how to get involved? And that's when we go to our plan, where our plan is like, hey, I need X, Y, and Z to happen. So if price does this, then I look for that. If price does that, then I look for this. If we get that, then I buy it. And if I buy it, stops go here, targets go there. And we wait for the things that we need to wait for in order to execute the trade. And then E is actually execute it, which again, sounds simple, but with all the psychological stuff that happens in the market, executing or pulling the trigger is sometimes a little bit harder. But I think that's a process that any trader, no matter how they're using, can stick to, and you can customize it however you want. But it's cool because it allows you to look at the price chart the same way each time. And again, if you want to be a consistent trader, it all starts with consistent analysis.
Okay. And then, so now let's say we'll save psychology, put that aside, but like if your backtesting results don't match your execution, you mentioned earlier on in your career, you noticed that you compared what your backtesting results were compared to what you actually did. And it was actually you that was the problem, not the analysis, right? So once you notice that, in your audit, so first of all, what should you be auditing? What should you be keeping track of in terms of metrics? And how do you know when a tweak is necessary, and what do you tweak?
Well, you should be keeping as many details as you can about your trade. So there's the obvious stuff where it's, entry numbers, exit numbers. If you're day trading, time of day is important, or day of the week is important. If you're swing trading, not as much, because they're going to be kind of around different places. Different target levels. Sometimes traders, in your back testing, you should be testing different target levels. Sometimes traders do that in their live trading as well, where although they're taking a specific target level, they have different things they want to kind of track in case they want to get more aggressive or more conservative. You can take that as well. But the things that no one talks about is you want to track, or you should really grade yourself on the trade. That's the most important part. You can grade yourself on the analysis, you can grade yourself on the execution, you can grade yourself on, say, the trade management, as well as making like different psychological notes. How did I feel at the time? Was I scared? Did I want to rush into it? And ultimately, you want to compare. Ultimately, you want to take all good trades. So you grade yourself grade A on all the execution. But if you're someone that's making mistakes, what you want to do is you want to compare what your trade results would have been if you would have executed your plan flawlessly versus the reality of you making mistakes. And 9 times out of 10, when traders are struggling, it's going to be personal mistakes. So when I did that audit of myself, I saw that, man, like most of my losing trades came when I did dumb stuff that I wasn't supposed to do. Maybe I shouldn't do those dumb stuff. But there's also been times in my career where my trading results have been down, and it's because of changes in market conditions. So in years like that, those are a little bit tough, because the first thing is you gotta judge whether it's you or your system. And once you get past judging like, hey, it's my system, now it's like, well, what's going on with it, right? And that's when digging into those metrics really helps. So you can compare stuff. So again, I compare different target levels when I trade. And when I go back to my results, I say, okay, well, this is the target level or levels that I was taking. What if I would have done this level? Or what if I would have done this entry reason? And then you can kind of compare the two, and you can see like, hey, if it's a low volatility year, I may not get the same kind of big directional moves that I'm used to. So maybe I have to adjust to kind of being more in and out, where I'm more conservative, but the profits aren't as big, and it's kind of just like a survival tactic to maximize. And that's tough, because one, you never know when these years come until it's lagging, right? So I never know that a high volatility or a low volatility year is here until it's been like 6 months. But you also have to give yourself enough time to properly evaluate. Like, you can't have a 1 week losing streak and switch everything up. right?
Right.
I don't even think you can have a quarter. I think 3 months is too short, especially if you're a swing trader. So I
Mm.
typically I do evaluation every quarter, every 3 months. So I'll evaluate 3 months. If there's something that stands out, I'll watch it for another 3 months. And after that 3 months, if it continues to be the same, then I'll make an adjustment. And then the same thing for going back to normal. So the hard part is, again, you can't time these things. I think a lot of traders want to be like, well, I'll just switch to this method when the market's doing this and switch to that method when the market's doing that. And the truth is we never know. And sometimes we're going to switch our method right when the market period has changed, and it's like
Mm.
we're always behind it. But for me, making those adjustments on the non-psychological side, is just to put you in the right place to begin with. But making those adjustments to kind of survive and adapt with the market conditions, it really is that. It's in a situation where maybe a year isn't going how you thought it would be, and you're saying, okay, well, how can I kind of survive this until market conditions have gotten back to quote unquote normal? And it's tough.
Yeah. And are you, so let's say you've gone through the 3 months and then the 3+3,
Mhm.
and you're like, there's something that I should be changing. Do you
Mhm.
go back and do you work on fixing the existing system, or do you look for a new edge entirely? Like, are you manipulating the existing edge and trying to optimize it and like change the targets, change the stops, change the entries? Or are you saying that, okay, this is not working right now, I'm not gonna trade this for now?
So I'm looking to adjust my system. So I'm never looking to add a new system just because it can't be done that quickly. I mean, if you're going to add a new system, again, we got to go through the process we talked about earlier: strategy development, back testing. At least for me right now in my career, that takes a while because I've got different things to do. So I can't just knock out back testing in 3 months.
Right.
No, now I would say this, but we'll stick with that one first. So it is about adjusting the current system that you have, where it's like, okay, what is letting me down? So a couple of years ago, I had a system that was letting me down, and one of my strategies, and I noticed that it was letting me down because the secondary targets, the aggressive targets, were underperforming. Price just wasn't getting there,
Mm.
and because it was weird, I felt like I was hitting at my normal win rate, but I'd look at my results and I'd be like, man, I'm not where I was supposed to be. And you dig into it, it's like, okay, well, target one, which is what I count for my normal win rate, that's hitting the way it should hit. Target twos were letting me down. So target one was outproducing target two. So it's kind of common sense there. I'm wasting money on these target twos. Let's just take everything at target one, right? It won't be as profitable as the system usually is, but it will help me weather this storm. So that's an example of making that adjustment. Now, as far as adding new edges, that is something that could be taken into account as well. So I was mainly a counter trend trader up until about 2000, maybe 2014. And I noticed a trend. I noticed that every September, and not necessarily the case anymore, but historically, September was always a very directional month. So there's a thing that the big traders come back from their summer break. They see all the mess that the little traders kind of did. And they're like, all right, let's get things back where they should be. And you see money flush and it's really directional.
Right.
So directional trading killed me as a counter trend trader because I'm making my money off of like failed moves and I'm just getting lit up. So I thought to myself, I'm like, okay, well, two options because this became a trend over years. Maybe I just don't trade in September. And I didn't feel good about that because I don't want to miss. I feel bad about missing trading opportunities. Again, knowing how probabilities and edges work, it's like
Mm.
I got to take everyone to execute it. But what I started doing was I started working on implementing a continuation strategy, something that allowed me to profit off of directional markets. So a little bit of a hedge. So it kind of balanced out my portfolio. So not just in September, but other months as well. Now I had something where, hey, I have my normal counter trend stuff, but in months or periods of time when the market's being really directional, my continuation trading is going to boom and it's going to make up for my counter trend trading. And then vice versa. My continuation trading may get hurt a little bit in the consolidated months, but my counter trend trading is going to perform well. And what it does is maybe it doesn't create the same type of equity highs, but it makes a smoother equity curve because now you have two systems that are kind of complementing each other. And if you're setting up your trading the right way, where hopefully your risk is outweighing your reward, that complement should push your equity curve in the right direction. So I do think that is something that ultimately traders should try to do, have something that they can take advantage of different type of market conditions just to be a more balanced trader. but you don't necessarily have to. It's not
Right.
mandatory.
And when you're looking back at your performance, what is meaningful to you? Like, obviously there's probability, risk, and reward, but just being profitable, just having a positive expectancy may not be enough. You may want to optimize that. So what number are you looking for? Like, do you use profit factor, or is there some metric that makes you think that this is the type of system I want? Or is it just like, is there an edge? Is it a positive expectancy system?
So for me, the most important thing is going to be the actual equity curve. And what's important about that, because it's one thing to know your profit factor, it's one thing to know your overall return on investment. But, and I learned this from managing money. This is the best lesson I learned in managing money, because those clients they didn't really care about how much I made. It's like, how much do you lose to make that much? Because I was in there trying to sell them like, hey, I'll make you 50% a year, but it's going to take like a 30% drawdown. They're like, no. I'm like, but 50% a year? They're like, yeah, but 30% drawdown. I'm like, no way. So that taught me a lot, because, we have different money management spreadsheets and position sizing strategies where we can crank it up. And, I put my stats on there before, and I've made like, I think like 600% a year once, which is crazy. But there's like a 60% drawdown. And in reality, you're like, I would never do that. That's just too much risk.
Right.
So the equity curve, while it's so important to me, is because you get to see kind of the overall flow of it, where it's not just the end number of like, hey, this is profitable, this has a positive expectancy, or this returned 50% for the year. It kind of shows you what it took to get to that 50%. And for me, I'm not a super big risk taker. I'm not. The return is important, but I'd rather conserve my risk, right? I don't want to take a 50% drawdown. That's too much. I would rather stay above 20, to be honest with you. I don't want to go below that. Right. So when I'm analyzing a system or a strategy, it's taking that into account as well. Like, yes, I'd like to make a certain amount of profit, but I also want to make that profit. I also need to do so keeping that drawdown above a certain level. And I'm willing to take less profit if it means conserving more risk, because if I can conserve that risk, now I can do some cool things with my position sizing strategy, which will actually end up creating more profit in the long run. So it's an interesting dynamic. And we get that question a lot from traders. Like, what does the edge need to be? Like, what type of return do I need for it to be worth it? And it really ends up being an individual question where, what's worth your time?
Right.
Because you can say, hey, a 10% return a year is a positive return. But if you're day trading and you're spending 5 hours a day in the market to make a 10% return, you might as well just invest in the S&P and spend an hour a month, just dollar cost price cost average in there, and you'll be fine. So you got to find that balance of what works for you and what is actually worth your investment too, your time investment.
Yeah, and you mentioned this often, is like, you might find a much more profitable system, but if you're going to win 20% of the time, is that really something that you want to do? Even though you make more money, do you want to lose 80 times out of 100? Probably not. So you probably have to find something that not only matches your risk appetite, but also, like, is it going to match your psychological state and your personality, so that you can actually perform adequately and not like bail on the system halfway through because it's too much for you.
I've been there. That will happen. I've had systems that were like amazing, but like 30%. And I'm like, I'm just going to do it anyway. I'm robotic, no emotions. And then as soon as I hit that first like 10 trade losing streak, all those emotions come, and I'm like bailing on it and making mistakes. And I'm like, and you learn, hopefully you learn.
Do you think that the tendency for most traders is that they should aim for higher, I wouldn't say high probability, but higher probability? Do you think that as human beings, we're just not equipped for low probability strategies? Or do you think there might be an equal number of low probability traders as high probability, and it's just even throughout?
Very good question. I would say we're probably more ingrained we probably do better off of high probability. I mean, in general, pain sticks with us more than pleasure. Right. And if you think of each loss as being pain and each win as being pleasure, to put yourself in a position where you're experiencing a lot more pain and pain is hitting a lot harder than the small units of pleasure you get, it just seems like a recipe for disaster, aside from those who are very strong-willed. I think we need kind of taps on the back. We need data boys, data girls. Like, we need to be kind of coddled in a way that makes us know that we're doing good in order to help us continue to succeed. So I certainly think we need higher probability win rates than lower ones. Again, there is a group out there, and especially you see a lot of your athletes, you see a lot of your military, your very highly disciplined people can do that. They can hit at 20%, like Richard Dennis in the Turtle Traders. You can be in like the teens and be profitable. But what you don't hear about the Turtle Traders is that most of those traders didn't end up doing good because they started breaking the rules when they were hitting that 20%. Like they started bailing on it. So again, it comes down to knowing yourself as a trader. I think you should certainly start probably something that gives you some wins. And then maybe in that, during that progress, your process, you kind of understand that, hey, like, maybe I can deal with a little more losses as I become more confident in myself or more confident in your numbers. But definitely higher to start. Definitely. There's probably more.
Yeah, I think, and especially for me, like starting out when you're doing a low probability strategy, it also kind of, well, for me, it gave me permission to be a little bit more careless and be like, I'm supposed to lose this trade anyways. I'm going to lose 8 of them, 9 of them out of 10. So like at a time when you're supposed to be disciplined, you're giving yourself permission to be less disciplined. And that really made me tend towards higher probability because I realized that I'm just allowing myself to be reckless.
That's a good, I never thought about that. That's a very good point. That's the first I heard of that. But yeah, you're right. If I'm supposed to lose, so
yeah,
might as well do something dumb anyway.
Yeah,
that's a very good point.
Yeah.
I'm gonna have to steal that.
Cheers. Okay, and then so can you briefly talk? So we did do the right things. I think we have a good sense of the right things. Now, doing them the right way. What does that mean to you? Like, in terms of, I know you're very intentional about your time. So like, how do you schedule all these things so that you do them properly, intentionally, and like, what are your thoughts on doing things the right way?
You got to be organized. You can't rush. You got to understand. I'm someone that historically has rushed a lot, like even going back to school and just do it as quick as you can and get it over with. And then what happens is you wind up making mistakes and you got to go back and do it over again. So back testing was a good example. When I first learned about back testing, it was just a means to an end. Like, I had to back test because my mentor told me to, so now I can't trade until I back test. So like, let's back test as quick as possible, the bare bones minimum, sloppy as possible, just so I could have numbers and be like, oh, I did it. Now we can trade. Mm-hmm. And what I ended up doing is I ended up making mistakes. I ended up doing my initial back testing probably over about 6 or 7 times, because either I would make a mistake or I would back test and realize something like, that looks interesting. Maybe I should test that. So instead of saying, hey, let's think about what I want to test. Let's practice this target, this entry, do it all at once and have a good idea. It was just like, oh, this way is going to work. Test it all. Oh, that way didn't work. Oh, let's test it all this way. Oh, what about this? Ended up being a gift and a curse because I got a lot of reps, but it was a big waste of time. So I was doing the right things. I just wasn't really doing it the right way. I was rushing it. So taking your time, understanding what you're going to do. We see the same thing a lot with the boring stuff of trading, where, in our courses, the first thing we're teaching is like how to read a price chart. Here's a candlestick, right? Open high, close low. Like, here's the psychology of a candlestick. Here's how to read structure, support and resistance, uptrend, downtrend. And it's tough because at the time, as a newer trader, like, I want to trade. Like, I'm doing all this practice, but I'm not actually, like, he hasn't even talked about executing a trade yet. We're just like, is it a bullish trend? Is it a bearish trend? Right? All the boring stuff. But understanding that those things are needed. Those are the foundation of everything else you're going to grow. So if you take time to really learn that, by the time you get to the more advanced stuff, it's going to start making a lot more sense. And now you can piece it all together versus the person that has to go back. And we ran into so many people where it's like, they get into like a strategy section of a course and like, well, I don't understand why I can't take this. And I'm like, well, remember about reading price action? What do we say? And they're like, I got to go back. And then they got to waste, they go back and they spend another month going all the way back. And just because they rush through. So doing things the right way, being intentional, organization is the key. I'm big on scheduling now. I'm big on to-do list with sounds. When I do something, it gives me like a bing. It makes me feel good. I'm massive on that. But start deliberately organizing time. So if you're testing or you're going into markets to play around, say, hey, I'm going to spend an hour today doing this in the market. Or I like using something called, I'm not sure if you heard of the Pomodoro technique.
Yeah.
Yes, I started using that because I get distracted a lot where it's like, oh, question on social media. Oh, this, oh, that. So like, that's one of the reasons I was a little bit late today. I was locked into a Pomodoro, like, okay, I'm spending this 25 minutes doing this project and I'm blanking everything out and just locking in. And then before you know it, it's 105 instead of 1255. But being really intentional about what you're going to do and purposeful and plan ahead, organize it. I think that's big.
Yeah. And how much do you think, like, how much time is someone spending time, like for a day trader, for example? I find day trading to be inefficient in the sense that, you're waiting for a lot of the time. And I trade the 5-minute chart. So every 5 minutes, I'm trying to decide if I should be doing something. And so I can't really do something else if I want to be focused on the 5-minute chart. So I find it to be inefficient, but then I also want to journal and I also want to keep track of my trades and write notes and backtest and adjust. So like, how should someone schedule trading with, like, how much should be the actual active trading for a day trader and how much should be the other outside study stuff? Because I know you used to day trade at one point and you transitioned more. So like, what would you say to a day trader who's trying to, like, what ratio of time should be spent on these different things?
So I don't think you need to day trade for that long. In fact, there's only probably a handful of sessions that are actually good for day trading, and you can kind of, and it may vary depending on your system. One of the systems that my buddy over in the UK he teaches, it only works at there's 2 hours in the morning. It's like from 2 o'clock to 4 o'clock my time in the AM, and so that system he only trades during that time. But when I day traded, I did about 3 hours a day. And it was during an active period in the market. So I did from about 8 o'clock New York to 11 o'clock, usually around lunchtime, which is like 12. So getting there, that's when the movement kind of stops. Everyone goes lunch, then London's over. So the rest of the afternoon is pretty boring unless there's a big fundamental event. I also didn't want to wake up 3 o'clock in the morning to trade the London session because I just wouldn't be focused. I didn't see it necessary. So I think as a day trader, I think what's cool is like, I don't think a lot of day traders understand that you don't need to spend as much time in the market as you think. You don't need to be in the market 8 hours a day. It's pretty inefficient. If you can schedule a 2 hour, a 3 hour block, or maybe a 4 hour block, depending on what you want to do, and lock into those 4 hours, or 3 hours or 2 hours, I think you can get what you need to get done, and then you'll still have a few hours during the rest of the day to do the rest of the stuff. But yeah, day trading is difficult because one of the benefits of swing trading is that if I analyze something during my pre-market at 6 o'clock in the morning, I know it's like, hey, I'm gonna have to check this chart again until 9. So I've got 3 hours where it's like, well, the next candle doesn't close till 9 o'clock, so I can't do anything anyway. So you have all this time to kind of do the in-between stuff. Day trading, I loved it, but like you said, it took a lot of energy because I'm in this intense stage of focus because like any second now it might. And you get into a point where it's like, I'm 5 minute comes, I'm running to the bathroom because I got to get back before the next candle closes. And it's like, it requires all your attention. So that's just part of the deal though.
And I think like what you mentioned, sorry, go ahead.
Oh no, I was gonna say, I would say traders just realize, like you said, you don't need to day trade as many hours as you think. I think a 2 or 3 hour period is more than enough.
Yeah, I was gonna say what you mentioned earlier, like the opportunity cost of should you be trading if you can just dollar cost average the S&P 500. In the same way, like I noticed in my stats that between 12 noon my time or 12 New York time and 1:30, I take like 6 trades a month. And even though maybe green, it's probably not worth the green, like spending 2 hours every day extra waiting for that one trade a week. So in that sense, you might be able to go through where's the most volume of your trades, probably in the morning, the opening of the session, and then schedule time around that so that you're being as efficient as possible when you're trading when the most trading is taking place and when your system works.
And like in your back testing, if you do proper back testing, you'll be able to see that. So if you're keeping track of the trading hours in your back testing, you'll be able to see where it's like, okay, the bulk of my trades are between, and that's how I decided on 8 to 11. The bulk of my trades came between 8 and 11. And then there was like there was like scattered stuff in the afternoon, but it's like, it's not worth it for these like 4 trades a month. So I'll just focus on the bulk of them.
Right.
And that goes back to, like I said, if you prepare the right way, you'll be able to see that, and you can really kind of pinpoint like, hey, these are the hours that I need to be focused, and the rest I can do something else.
Right. And then the last thing for do them the right way, it's also kind of do the right things. But what do you think are like the drills, like for as a sports guy, that a trader could do every day to like the scales of playing the guitar, or the piano or whatever? Like what can a trader do every day to keep their knife sharpened so that they're staying on top of their game?
Ooh, 2 things. One, they can day trade if they're not a day trader, because the market moves the same way on all time frames. Maybe a little bit more wacky on the day trading charts if there's news, but the fact is the candlesticks are going to be the same. The ups and downs are going to be the same. The patterns are going to be the same, just with more frequency. So day trading, spending a couple hours on like a very low time frame, it's going to be like watching or listening to a podcast with the speed turned up, where you're just getting more frequency and more frequency over and over again. So that's a good drill right there. I've had a lot of traders that, came to my live room to day trade, and they're just there because they just want to see frequency. Another thing is just going back and spending a few minutes or an hour or so, just going through random charts. So I'll go into TradingView every night, and they have a good replay feature where you can basically simulates a live market. I'll pick a random pair, a random time, and I'll just go through and make predictions. So just like it will be stuff I trade, it'll be stuff I don't trade, where I'll just be like, hey, okay, we just did this. I think we're gonna go here next. And I scroll it forward, and then boom, it happens or it doesn't happen. And I think that's a good way to kind of pay attention to the small things. Because again, like we spoke about earlier, that intuition, if you're spending that time going through those random charts every day, and just, maybe you're spending 20 minutes, it doesn't take that long, and you keep making this prediction, and you're like, man, like I've been right a lot. And you can even track this stuff too on a separate spreadsheet if you want. You start asking yourself the question, like, well, okay, I'm right a lot. Like, what am I seeing that's making me right? Because I should probably be making money off of this. And then you go back and maybe you find something. Maybe you're like, hey, this specific candle bar when at this specific location is what I'm seeing. And then before you know it, maybe it turns into something that you dive into, and you create a strategy and you test, and maybe it becomes part of your arsenal. But either way, it's good recognition of the market. It just practices kind of the skills of reading a price chart. And then, of course, the same thing could be done with indicators or whatever the preference is for the trader. So deliberate time in the market. Hey, study for 20 minutes, random chart, or either that, or if you're going through training, you can work on something specific. Where it's like if you're learning about double bottoms, just be like, hey, I'm gonna find 10 double bottoms tonight. Boom, that's your homework. Repetition. Then when it comes game time, it's kind of like a muscle memory. And trading is the same way, where it's like, this is my trading style. Whenever I'm practicing on charts, this is how I'm going to handle it. This is how I'm going to handle it. This is how I'm going to handle it. When it happens in real life, you don't freeze up. You're not like, what do I do? And then, especially if you're day trading, you miss the trade. Now it's like, okay, I've seen this before. Okay, I'm waiting for this. It did that. Okay, 5 minutes. Boom, execute. And you usually become a lot more comfortable because you've rehearsed this. Like any other routine, the more you rehearse it, the more comfortable you feel. You're at a much more controlled state when it comes down to trading.
Yeah, I think I felt that, because when I heard your IPD system, I was like, I need some, because as a day trader, it's so hard to make a decision. I'm thinking about so many different things, and I'm like, I need to have a framework where, like, I'm a slow thinker, so I can't make decisions really, really quickly on the fly. So I need a system where I can just go through it. And so I use a variation of what you teach in the IPD, but like I find it completely necessary, because I can't on the fly just see everything and make a call. I need to run through a checklist in my head. And so that's why I find that so powerful, because I have to rehearse those things so that when I see it, it's like, I've seen this 100 times. I got to just press the button instead of having to make a new decision in that moment about what to do next.
When I started trading, I literally had my plan printed out and taped to the wall behind my monitor. So like, I would just be like,
can you see my,
yeah, exactly like that. Yeah. I look over. Okay. Are we doing like, until it became ingrained. I need to literally like, just like, all right, check. Okay. Check. Okay. Check. So like, we're in the same boat, like, especially in with day trading, it goes so quick, and there's so much on the mind happening at once, and the emotions are so high. It's it's just everything elevated. It's tough. So yeah, there's no shame in having the checklist, guys. You got two traders right here that use a physical checklist. No shame.
So do the right things in the right way for the right reasons. We covered all three, and now do them for the right amount of time. Can you just talk briefly on like what is the right amount of time? I think the numbers of like I had 10 years in my head, but 10 years was like, you don't just not make money and then 10 years later you make money, because it's a journey and you become profitable, a little bit profitable, and then 10 years might be a level of expertise that is beyond just a little bit profitable. So there isn't just like, it's not 0 to 100, but like what is based on what you see in your students, what's a reasonable amount of time for people to dedicate to start seeing some results?
I would say, and assuming you're on the right track and someone's working hard on stuff, usually between 9 and 18 months is usually when you start to see results. You kind of learn, you make mistakes, and you do all the testing and stuff. And obviously it differs depending on someone's schedule. You can have someone that was like, when I first started trading, I quit all three of my jobs. So I just had like 24 hours a day to get after it. Some people just have the weekend. But usually 9 and 18 months is what it takes where people start seeing consistent success. So they'll see success before that, but then they'll do dumb stuff and give it back, or they'll mess up. But about 18 months, they start to kind of find themselves as a trader and become consistently profitable. And then it's about taking it to the next level. Then it's that slow kind of progression, Kaizen philosophy, one little degree of change at a time. And then before you know it, 10 years comes. And, I don't think we ever reach a level of mastery. We probably do. I just don't like saying it because I feel like that's something that will like stop me. I always want to be like, hey, here's the carrot. Like I'm an underdog. That's what keeps me going.
Yeah.
But yeah, usually about 2 years in, we start to see a lot of our traders change. And then it kind of starts the next process, because they're usually, again, like we spoke about earlier, pretty disciplined, pretty strict in what they're doing for those first 2 years. And then they start seeing success. And then you see them start to experiment and add and adjust it and really find themselves as a trader, where it's like, hey, maybe I based my philosophy off of the things that coach was telling me or this specific system. And then once they get it, now it's like, okay, well, I've made these adjustments to it because that's based off what I see, based off what I've observed in the market. And then once you kind of get once you get 5 years in, probably even before that, but definitely once you get 5 years in, you're running on autopilot. And now the question is like, how can I elevate what I'm doing? How can I, and elevate could be different things. It could be, how can I take it to the next level? Whether it could be teaching, it could be coaching, it could be starting a business. It could be, we got a guy I think he's got a 5-year plan now to start a hedge fund. That's his bigger goal. We had traders that did that before. I didn't even know they did it until we got the email. I'm like, sheesh. But you start thinking of, okay, how can I take my trading to the next level? And even if you don't want to do something like that, it's like, okay, well, how can I start maybe raising capital so now I can fund my own account a little bit better so I can produce more profit? So that becomes a new goal of, once you're still learning how to trade, obviously you're always learning, but it's like, how can I kind of elevate the business aspect of it so I can maximize what I'm doing now that I have this at least the skill part kind of solidified. And that's cool. It brings a whole new other adventure.
And what is, like, and my last question is like, what does getting 1% better look like? How do you quantify that? Like, is it like this month I'm working on getting my losses down, or like, what does that 1% look like when you're trying to get better at something? I know for a long time, maybe even now still, it's like, I want to get better. I want to get better every day. And like, just trading every day is not you getting better every day. You have to do something. So like, what do you advise to your students who are hungry to get better? What should they work on?
Well, I would say it's learning. And it could be different aspects for different people. Obviously, when the newer you are in trading, the more mistakes you're going to make. So the more mistakes you have to fix. So it always starts off with like, let's eliminate all those mistakes or most of those mistakes. After that, it can go from a place of like, okay, well, I've eliminated most of my mistakes. I'm trading well. How can I maximize my performance? And maybe that's evaluating, how can I get a little bit better with target taking? How can I get a little bit more on each profitable trade? Or can I get a little bit better with stop placement? How can I give back a little bit less on each time I have a losing trade? Or maybe it's again, becoming a little bit more aggressive with entries, or maybe a little bit more conservative with entries to kind of mix around with my win rate. So stuff like that, the sharpening is key early on. It can then become like, hey, how do I add another strategy to diversify? How can I add another portfolio to add to my pair? That stuff as well. And once you get to the state, and again, we're always in that learning state. I have a bunch of stuff that I want to do. I want to get more into volume, as I started 2 years ago. I want to look more into breakouts. I don't trade breakouts currently, or I don't trade them aggressively. I'd like to, because I'm really good at predicting them. I just can't. I don't have any rules for dealing with them. So those are stuff that I'd like to work on. So it ends up being, after you kind of tidy up what you're currently doing, how can I add, or even what can I learn? And sometimes it's not even adding stuff, but it's like, hey, what can I learn more about the market? So I know me, when I got to a state where I was, I hate using this word, but comfortable in my trading, I felt confident in my trading. I went back and started relearning the stuff that I was doing before when I was a bad trader. Because after I accepted the fact that, hey, it wasn't the system that was bad, it was me, I'm looking back at like, hey, some of this stuff might have been good. It was just me messing it up. So I go back and learn about it. I went heavy back into like classical charting patterns, like the classics, like Head and Shoulders and stuff like that. And it's interesting what you can learn when you revisit stuff from the past with kind of a new mindset. So to this day, once a year, I have this dedicated period called continued education, where I'll even still go back to my old training courses that I took, and look through all the lessons I took and be like, I never noticed. Oh, that's what that means now. So just making the effort to kind of move in the right way. And it's not always quantitative. Again, at the beginning, it could be pretty quantitative, especially if there's stuff there. But it's also a thing like, hey, am I doing something to better myself? And it can even be stuff off the chart as well, where it's like, hey, can I limit, or, can I be more organized? How can I be more efficient? Can I spend more time with family? One of the things that I wanted to do is, again, especially when I had kids, it was tough for me to, the hours that I spend with kids used to be trading hours. So all of a sudden it's like, I got to spend time with the kids, the wife. How can I be as efficient with my trading with doing it in less time? So that became my 1% better, of being more efficient with my trading hours, so that I can actually turn the computer off and spend time with the kids, remembering that, hey, kids, wife, family, that's my main why. I don't want trading to kind of sacrifice that. So it's a never ending journey. There's always going to be something. I think that's part of, I think most successful traders will have growth mindsets. And if you have a growth mindset, there's always something. You may venture out into crypto, you may venture out into gold and experiment with different markets. Who knows? There's always something to learn.
Yeah, I love that. And I love that you are always trying to be a better trader, a better teacher, and like constantly trying to be a better person. I think a lot of people can learn a lot from you. So I really, really appreciate you giving your time to be a guest on my podcast. No, and I hope we can do it again sometime. This is awesome. Like I really learn a lot from you. I watch all your podcasts, all your content. So I really appreciate you coming on, and I hope people will learn a lot from you.
Sure. Yeah. Whenever you want me, I'll come back on, man. It was a great conversation.
No, this is awesome. I appreciate it. And then do you want to tell people where they can find you on Twitter and on social media?
Yeah. So if you want to find me on social media, I'm all over the place at Akil Stokes RTM. Just watch out for scammers. If anyone ever reaches out about selling you systems or managing money, it's not me. But I would say feel free to reach out. Again, I don't bite. I love asking questions. I love having these conversations. So shoot me a message, shoot me a tweet. Doesn't matter. I just love talking trading, as you can tell. So at Akil Stokes RTM on Twitter, YouTube search Akil Stokes as well. Got videos and stuff over there. Lots of stuff for you.
Awesome. Thanks, Akil. Appreciate it. Have a good rest of your day. Appreciate it.
Thanks, you too, man.
Thanks. Take care.